Greetings, traders. This is Mohan here. Thank you very much for joining with us today, and welcome to the Wednesday's training session for Boomerang Day Trader. Before we get started, let me go over this risk disclaimer here, which is important to know, and that is that you must be aware of the risks of futures trading and be willing to accept them in order to invest in the futures and the option markets as well. Don't trade with money you cannot afford to lose. Generally people who trade in the markets should be rather well off and using money that's aside from all their regular and needed expenses and be able to handle any losses that occur or any drawdowns in their accounts and be able to replenish those accounts if necessary to keep the business going. Yes, it is indeed a business and a very vital and important business, but also can be a business where if you're not careful, quick losses can come. And we're going to discuss all that today, and I really appreciate you joining with us. So before we get started, I wanted to mention a couple things to you. Let me just set this up here. First of all, if you're new to Boomerang Day Trader and you've just heard about us or finding out about us, the first place to go for all things Boomerang is right here at the boomerangtrader.com blog. Here on the blog, you can learn all about Boomerang Day Trader, our 90% guaranteed winning trade setups, which I'm going to show you today, as well as you can go into, like, for example, the resources section and learn more about trading with Boomerang. Namely, like recently we had an update of something I had been working on for a while, and I released the idea of the Boomerang trend trading method. Very exciting way to add usually up to 2 to 3 additional trades to your trading arsenal every day. Very exciting to have that. It works, and now many of you who've been using it for a while see how well it works. It's great to have when the market makes a run. Now you have a second opportunity to get aboard a moving market. Things like how to manage congested areas and whipsaw in the market, which we've had a lot of lately since the Brexit event and things like that. It's going to create that. Welcome to the wonderful world of trading. This is a live, living business that fluctuates every day with the conditions of the world and the markets and the government reports and all kinds of stuff. So we're going to talk about that today, but this is a wonderful report here that talks about how to manage congested areas and whipsaw in the market. This is about some endorsements that we get, and I'd like you to really take a look at this. I update it regularly, and sometimes I get a chance to go over this with you, but we've had a lot of good stuff coming in. Here's one example of a recent one a couple months ago. I get them all the time, but I just don't always get them posted and updated. It's not something I totally focus on, but um, PH says, my commute to my desk is 15 seconds. I trade 10 NASDAQ contracts, NQ, which I'm going to be going over today. I target 2 trades a day for 4 NQ points. I'm already done for the day. I try to tell others about this. Only one person has seen the light so far and signed up, but more I think are on the way. He told me when he emailed me again. But he says once they see that I'm making 400,000 a year working, in quotes, a few hours in the morning, maybe they'll come around. I can't thank you enough. And we got a lot of similar endorsements here. One, I took 38 trades, 35 were winners, 3 losers. Um, there's all kinds of, these are from brand new Boomerang owners who've been using it for a while. And when they send me an email and I like it, I put it in here. And most of them are very good. A lot of the emails I do get, without a doubt, are emails where they're having a question or they're having a concern. And that's why I got them to these these bi-weekly training classes, because that's where we can answer all these questions and cover anything you may need. Now, by the way, I forgot to ask, let me bring this up here. If you can hear me okay and see my cursor moving, make sure and just quickly type a yes or a Y there in the platform. And I appreciate that a lot. There you go. Thank you so much. I forgot to confirm that, and it's so important to do that each time. And I'm seeing some of your comments here. John Z, thank you so much. Glad to hear that's working out good for you. And Reggie's asking how many trades were there today. only saw a couple of them. That's correct. I'll be going over those soon. As soon as I finish our opening briefing, we'll get right started on that. But so, again, if you're brand new to Boomerang or you've been experienced, always look for updates here. Today we're going to talk about the bunker boomerang trading method in these. When it's volatile, you just get in under the bunker, and this is how to do that and expect to have less trades. And one really important thing we're going to be talking about in a minute, and that is how to wait for exact trading setups. It's the easiest, hardest thing to do. I'm telling you, I got a problem with that too, and we'll talk about it in a minute here. But this is a short video that explains the exact two types of trade setups we use in Boomerang. They're very simple to understand. The markets are not simple. The markets are complex and can be very emotional and can be very grinding sometimes. And sometimes they're just like a piece of cake, and you go, wow, this is so easy. And then you go, well, hold off now because tomorrow all things could change and markets could go haywire. As we've now, for many of you newer traders, especially if you've only been trading for 5 years or less, you got to see the Brexit event, which I've seen many similar events like that, and that gave you a real good insight into the kind of madness that can happen all of a sudden. When the markets all of a sudden something shifts, there's a political shift and something happens, and kablamo, they tripled the margins on everybody, and you couldn't trade unless you had more money in your account, so you had to cut back in your contracts or send in more money to margin it. And it was a good experience for you. But luckily, it only lasts a couple of days. They shot the margins back to normal, and we're back off and running here. So keep that in mind. There's videos on these, and a lot of things you can watch. We have webinars. There's short 5-minute tutorials here on different things. All you got to do is click on this one here, and you'll see the short 5-minute video tutorials here in the library down here. You just click on them and it moves to the next. And these give you insights into how to trade with Boomerang and different things. So I wanted to make sure all of our respected new members and visitors today saw that. And one more quick thing, by the way, too. When you look for these announcements, all you got to do is just sign up on the home page. Let's see here. Just sign up in this box if you want to, and then you'll get notices. I don't put a lot of promotions or anything out through the blog, but you will get notices here. For example, here's today's training class. I send a notice. You click on this, and it tells you, here's the link to join and all that. If, like last week, because we had the upcoming holiday week and everything, I skipped last week's training, and then that's where I put the notice up here that'd be coming in on today. And that was because it was the holiday week and everybody was like, a little more anxious to get out and plan the weekend and stuff. I thought, why have a training? Let's wait till after the holiday and everything gets active again. Okay, so there you go, and make sure and go to the Boomerang blog for anything Boomerang. Also, you can join us on eSignal. We have a lease program on eSignal where my service, if you're an eSignal user or you prefer eSignal, you can use Boomerang just through a monthly lease there. It's quite exciting. Well, now, I noticed something, and one of the important things about trading is to always keep an eye on the news. You don't have to constantly monitor the news. You don't have to necessarily buy forward trading with Boomerang, one of those expensive services that monitors the news, or the squawk boxes or any of that. They're very nice, but you really don't need it. But monitor, I use CNBC. Yahoo is the largest mainstream news thing, full of bunk, a lot of it, but still it's the largest, so I follow them. And CNBC and Bloomberg as the three mainstream ones. And I have others such as Zero Hedge, which is a very important one to watch if you want to get some inside scoop on stuff and not just the normal kind of fluffy BS. But I got a kick out of this headline that's currently on CNBC, because I've been telling traders for quite some time that after January, I said the Fed's not going to raise interest rates. They almost destroyed the markets in January. They caused themselves so many headaches. And they keep doing this weird little game, and it's just to keep people under control, keep them hypnotized, where they say, "Oh, the Fed's going to raise." Remember the last meeting? I think it was last month or in late May. Absolutely, January. That's it. January 15th, they're going to raise interest rates. That's what they were putting out that word. They'd say that, and then they go, if all the conditions are met. But they would say it real like, well, parentheses, if the conditions are met. But they would say like, we're absolutely going to, it's time to hike rates up. Everybody was talking about it. Start creating a stir in the markets and everything. Well, today they had their Fed meeting notes, which came out today according to the economic calendar, and I listened to it on CNBC, watch it, and you should keep in touch with the economic calendar, and I'll show you that in a minute to watch these events. And now here's the headline. The Fed wants three things before a rate hike, which is what I said. They don't have the three conditions they want, and at least one of those won't happen this year. Well, there you go. After all that BS of telling us we're absolutely going to raise rates in January or June, parentheses, real quiet, under certain conditions. We already know that, but they can't just say we're not going to raise interest rates. The conditions aren't there. Now the headline comes out here, and they have three conditions, but one of them won't happen this year. And they added the Brexit thing because of the Brexit situation. Oh, it's all Brexit's fault, right? Um, they're not going to raise interest rates. So I just thought you'd get a kick out of that. I saw that today. I thought, well, that takes the cake. You know, the same thing where they say, we're not going to raise interest rates unless we have these three conditions. Well, why don't they just say that every time instead of lying like they did last time and telling us that they're going to raise interest rates? Absolutely, this coming June, it's all over raising them. Anyway, got to be very careful, watch the news, but it's important to know at least every day on a basic level what's going on. And I do have a section on this in one of the blogs where we talked about this. You'd have to just kind of look it up. I could find it, but it's in there. I should probably move it to the resource section, which talks about the day-to-day, workaday work of coming to the markets if you're trading the U.S. stock indexes. Now, crude oil, which we're going to talk about a little later, which is currently another contract I'm recommending you can trade alongside with NASDAQ, and that way if one is not really active or not working, you can trade the other one. You can also keep two charts running and all that. We'll go over that in a second. But for trading the U.S. stock market, you want to have the mameconoday.com. That's a weird website. It's mam.econoday.com. The site's Econoday, but you need this to get that daily free calendar that they put out. And you know, there's also Forex sites that have a good calendar. Forex Factory is good, but it covers all the world in Europe, and you're going to have government reports from Zimbabwe on there. And I'm kidding, but you're going to have very obscure things that you may not need. This is the U.S. market, and you can see right here FOMC minutes right here at 2 o'clock. So if you look at this calendar every day and you came in today and you said Wednesday, first thing you do is go, uh-oh, red flag, the Fed is involved in the market. And whenever that happens, whenever these clowns are involved in the market, and I say clowns because of the way they are running it, and many big, astute investors like Bill Gross and others who manage billions of dollars are also calling them clowns. So don't think I'm just being a punk. You know, they really, a lot of people don't appreciate the Fed. Anyway, the point is, the minute you see the Fed's involved in the market, caution. You might consider either real light trading for the first couple hours in the morning or not trading at all, but especially, and this is going to be our first topic when I take this off the screen, especially be very willing to watch for two things, and that is number one, what I call the Fed cheerleading squad, otherwise affectionately known as the riggers. You've heard me refer to the riggers all the time, and that word's becoming popular now. Donald Trump kind of made it a little bit popular because he's openly calling out these election riggers and these people like that, and Hillary Clinton committing all these felonies and yet getting off. You know, he's just, I'm not making a political statement. I'm saying, you know, she clearly broke the law, but she gets off, and he's saying it's a rigged deal. So But I've been using the term rigor since 2001 to call out the Fed and their activities. It's another subject, but the point is when the Fed speaks very frequently, almost all the time, especially at the FOMC meeting, the beginning of those, you have what I call the Fed cheerleading squad who visibly and clearly comes in on those days. Here they come, 10, 15 minutes in the market. Oh, they start just lifting the market up and lifting it up and all hail the chief. And here comes a. So you want to not, you want to trade in those days if you want to, but you got to be real careful and really handpick the trades, which we'll talk about in a second here, and just be aware that the Fed cheerleading squad is involved in the market on the days when the Fed's involved. And just be willing to just be careful on some of the bullish moves. Sometimes you can even hold them a little longer and get a boost. You can practically always expect the second level type trades or the trend trade moves. So, with that in mind, thanks for listening to my intro there. These are important things. There's more, but those are the basics. Make sure you know what's going on in your world that day because it's going to affect things. And the reason I'm saying is I get emails and they go, "Wow, what's going on? Oh, the market's really choppy and da da da." And they're trying because they're a little bit new at trading, which is fine. I'm trying to explain to you that when there's a deal like Brexit, like that, when there's a day where there's a Fed meeting coming up, you're going to get a change in the markets. It's going to be choppier because everybody's either sitting on their hands or they're just real nervous or they're trading faster or more wildly. You got to be aware of what's going on and then you can adjust things accordingly with what we show you here in these training classes. First of all, Boomerang is very, very simple to trade with. The markets are complex, but the Boomerang method is very simple. I'll give you an example. Here's a trade coming in here. One of the first method that we use is we watch for the market to be spread a point and a half or less. These are called the dynamic trend bands. This first dashed dotted line here is dynamic trend band number 1, and this is number 2. This is a trade channel. This is a Boomerang chart here for NASDAQ, and we use a standard default 450 ticks on NASDAQ and on the crude oil, which I'll show you in a minute. All we're looking for is a new channel. Like, for example, this is a buy channel. This arrow goes off, and when that candle closes, it locks in, and you've got a new buy channel. And so once you have that, you don't just jump in. You say, what is the spread on the dynamic trend bands? Or have they crossed over? Or are they matching color? Well, in this case, you can see here, this is about a half an hour into the market this was on 622. You can see that there's the buy channel's open and the spread here, 550. If you look at the far right of the screen, you see that 44.05 half and 44.03, 44.04 if I put my cursor right on the bottom, 375 to 4. So it's within a point and a half. If they're a point and a half apart, you can buy the next pullback to the signal line, which is right here at 44.06 even. Then you hold the trade, and 44.06 even drop down to 350, which is always a real pleasant experience having the trade move against you, but that's part of trading. That's not, you can't expect to get in and right where you get in the market's going to run. That often will happen with Boomerang, but sometimes you get a little tweak against the trade. Anyway, 44.06, and now you're holding it, and as the buy channel opens up, the prices move up. They run up and tap the Bollinger Band here and climb straight up, and 44.06 becomes 44.018 way up here. Well, all we're doing is scalping for 3 points. We are scalpers. This system for trading with Boomerang that I'm going to show you today, which is our core method for day trading, scalps for 3 points. Now you can use Boomerang Day Trader just for reading charts if you want. You can put stocks on it. You can use 5-minute chart. You can use a daily chart. You can use a 30-minute chart with Boomerang. It'll work beautiful on all of those. But I'm just going to show you today in the training the core method that we use for day trading. And on NASDAQ, that's scalping for 3 points. Now it's a little different for crude oil, and I'll go over that in a little while here. So there's your first 3 points. Now we have two types of trade setups that occur, and then we have a new one which is called the trend trading method. And what happens there is when you have the market moving up and you have the dynamic trend get into a steep kind of position like it is right here, you put your cursor up there. I always use a cursor because you've got these four lines you can watch. When I put it up there, you can see that the spread out here is pretty thick and wide. That tells you got a steep dynamic trend band. That says when the in a what's called a trend trading move is when the dynamic trend band number one crosses over the cobra. This is the cobra. I forgot to mention that. This dashed line or dotted line is called the cobra, and it usually will front run the dynamic trend bands by a little bit. As you can see, it's red here, and then it changes green here before dynamic trend band number one, and certainly before dynamic trend band number two. When the dynamic trend band number one cross over the cobra and you're in a steeper dynamic trend band number two move, you can buy a pullback to the cobra right here at 23.25, and again you're scalping for 3 points. It's this is a trend trade move. You're taking another 3 points as 23 runs up to 28 right here. You got 3 points in there easily. And then they pulled back a little, back to under 23 again, or towards 23, and then shot up again. All you want is that 3 points on that pullback to the cobra. Isn't that beautiful? It's a brand new element of trading for Boomerang that we introduced, and it works on crude oil as well. But crude oil is a little bit different in some sense, and I'll show you that shortly. So within this approximately 7:30, or this is my time, so this is a West Coast chart, but it's 10:30 to 10, well, let's just say till 11. In that half an hour, you pulled out two authorized, permissioned, regular method, permissioned by the rules, Boomerang trades for 3 points and 3 points. Now, that's 6 points, and if you're trading what I call a blue-collar working trader's account with 4 contracts, trading a small account of say 5 to 7,000 bucks, you had 6 points times 20 bucks per contract, 120 times 4. You made $480 minus the commish in that half an hour. Now that sure beats going to a day job and having to sit all day and follow instructions and get reports out and set up appointments and whatever it is you do. But this is an alternative way to working a regular type of job. You work at your home, like that one recent testimonial I had. That email I got from that gentleman said, my commute to my office is 15 seconds, and I make $400,000 a year trading 2 setups with Boomerang. So that's beautiful, and he's using the exact methods I'm showing you here today. Well, now, lo and behold, the dynamic trend bands come up here and they cross over, right? So again, the conditions are if you have a spread that's 1.5 or less, or the dynamic trend band 1 crosses number 2, or they match colors, one of those three conditions will allow you, it'll what I call permissioning the trade to be taken, because we don't just randomly trade for the seat of our pants. We're looking for new members to come in and buy Boomerang who are sick of losing, sick of following an unproven method that they invented from going to 10 different webinars or more, getting a bad case of webinaritis and indicatoritis, and they don't know where the market's going, and they're confused as to what to do, and all they do is lose money. Use Boomerang here. Here's the crossover. Here's the pullback to the signal line right here at 23.5. They run up to 26. They wiggle around in here, and then clunk, down they go for 3 points. Actually, you got 20 points right at this level here. So it was just a short wait, a little bit of a grind. 38 to 04. It took about 20 minutes of whipsaw, but he just held the position, and they took him down. And you got your no, actually, let's see here, 3.25. It came down to 20.5 right here. You might have gotten that if you got them in there. Otherwise, you wait a little longer, and then they came down and gave you 3 points. So within that short period, once again, you got 3 winning trades. I'm just going through this one day. Now, here is a classic second level trade, which is described on the video that I showed you. Let me show that again. Repetition is the mother of all learning, and it's absolutely wonderful. In that way, we can always remember things and show how you. It's called the. It's on the resource section of the Boomerang blog, boomerangtrader.com, the 2 Boomerang trade setups for entering trades. This has been the protocol for trades for over 6 years until recently when I introduced one modification, which I'll show you. Hopefully we'll get an example of that, and also the trend trading method, which I showed you a few minutes ago. Here's the method though. Here's trade number 1. This is called a second level trade, which is described in that report on the 2 Boomerang trade method. You get a counter move. You got a steep dynamic trend band. You get a counter move here where the arrow actually gives you a counter buy channel. In this case, the arrow locks down. You even get a blue dot pullback in the signal line, but it's certainly not a buy trade because the dynamic trend bands are both the sell color, or the magenta or reddish color. There's no question of this being a buy trade under any circumstance if you know the rules. We had a fellow on the last training. He said, well, I see a lot of trades there where you got stopped out. But unfortunately, he's one of those lazy traders. There's a bunch of them out there who don't even bother to come on to Boomerang and cruise the site and learn the rules before you make a smart aleck comment like that. Anyway, I straightened him out on the webinar, and he's ended up emailing me, and he really likes it, and he bought Boomerang, which is great. You know, sometimes that's what it takes. And I don't mind traders being skeptical because of what's out there. There's so much peddling of stuff by people who don't even trade, who just kind of, they're real good at getting on NinjaTrader and piecing together a bunch of indicators and developing a so-called system. So I don't object to that, but if you come on to Boomerang Day Trader, at least watch that 10-minute video on the 2 Boomerang method. Learn the method first, or attend one of these webinars because I always go over it. So here's a counter move, right? So what that tells you is on the next sell arrow, you get a counter buy channel arrow. The next time you get a sell channel arrow and a pullback the signal line, you're going to go short. Well, this was an odd little configuration here because you had the buy arrow, then you had the sell arrow come in and immediately got a pullback signal line. Now, when you see this buy arrow come in and close, you got your finger on the trigger up here to go short the minute you see a yellow dot. So you nailed it either there or there because there was another little whipsaw thing that created a counter buy arrow, but you either shorted them here or here, and that market came down literally 37. It came down within about a minute and a half and handed you another 3 points on that second level trade. Here you come over here, and what happens? Same thing. You get a buy channel opening up. You get the crossover of the dynamic trend bands, a pullback the signal line. See, they're either spread within a point and a half, they're crossing over, or they're matching colors. In this case, they're crossing over, so you buy this pullback right here. This is the exact authorized place where you would have bought it according to the rules. You could have bought them here too, no big deal. But you don't want to buy them way out here. You got to watch and learn the method and follow that exactly for the best deal. So here's your first setup right here at 4,400, and they shoot right up. So within about 2 hours, let's see, this total area from here to covered about 3 hours, but by waiting, because there was a lot of trading going on here, a lot of time went by. Within this 3-hour period, from here to here, you had 1, 2, 3, 4, 5 winning trades. And if you have four contracts on each one, that's about 230 bucks after commission on each trade times 5. You had an $1,150 day, and in most cases you're done for the day. If you're a fanatic like me and you love to trade, you can sit around and wait for the next setup. But just so you know, usually after this is like 11 o'clock, which is 2 o'clock, things can get a little shakier because sometimes the market has a mind of its own and it has its own little agenda of what it's trying to accomplish. It can get a little trickier, but still, it doesn't matter. The boomerang setups are there. Let's go over what happened the rest of the day. So now, in most cases, you're going to end your day here with 1,100 bucks after commission, and you're watching for the next trade setup. Well, now that you're an expert on trading with Boomerang, right? Because you've watched and paid attention this morning here or this afternoon. What do you have here? Do we have a Boomerang setup? We have a new sell channel here. We have one here. There's no matching dynamic trend bands. There's no point and a half spread on the crossover, and there's no crossover, is there? Here's a counter buy channel that certainly is not a buy trade either. Here's a new sell channel coming in. What do you have here? That's right. You have 44.04 half. You got 4 half and 6 and a quarter. Still a little tight here on this candle, but when this candle opened up, the spread was a lot tight. When this candle ended, this spread tightened up a lot, so you either shorted them here or you might have had to wait and short this one because on this candle here at 4400 quarter, you've got the dynamic trend bands crossing over and matching color. So 4400 came down to 97 and just eked out a 3-point gain right there. But most likely, with you see them tightening up here in the new sell channel, you can go ahead and short them up here and you'd have had a faster result there. Again, though, notice how it got a little trickier after 2 o'clock. The market got a little trickier, but then that was it, and then they came into the close. So that's what happened on that day. Now, what I'll do, a couple of questions came in. I usually don't answer the questions until we have a Q&A session, but I like to uh, keep things cooking here. Now, one question we had came in. One question says, can you add to the dots? In other words, pile on more trades on the dots? Well, that's an excellent question, William, and that can be done, but that's really not part of the method. The 6 dots, what will happen is Boomerang will print the sell channel, and it'll print up to as many dots that hit the dots occur. And I forgot to mention this, when you hit the trade signal line. I'm often assume, you have to forgive me, sometimes I assume everybody in the room is experienced Boomerang user. This is the trade signal line, and the dot will appear on the trade signal line. That's where we make the trade. It's alarmed and instantly prints on the line. And because the rules, I've had people say, oh, well, this is a still chart, so it doesn't really matter whether it's still or live because the dots and the method is crystal clear and written in stone. It's not able to be fudged. If this dot here prints and you go short here, you're putting on an automatic 5-point stop and a 3-point target gain. That can be set up on brackets just by one click, and you put on a 5-point stop through a gain. You see there's no 5-point stop that came in to get hit. If it did, if the market live had given this signal and then shot up here, I would have said, oh, we got stopped out. But that didn't happen. None of the trades got stopped out that I showed you today. Now, you really don't want to pile on more contracts. You can if you want. Usually, if you're going to do that, I do that if the trade moves against me a little bit. It's a nervous business, you know. But the idea of these dots is that it's just a courtesy. The dots are actually a courtesy. The trade is taken as at the nearest first or second tap on the signal line after the sell channel opens and you have the correct dynamic trend band configuration. Normally what I'm doing is watching the far right side of the chart. Here's the price marker here, and I'm watching for that price marker to merge into the signal line price marker. And as those merge, I go over and hit the sell or the buy. As soon as they merge, a dot will instantly print in a millisecond, and you'll hear an alarm sound, which is programmed. There's 9 different sounds you can program to tell you when that hits. But my recommendation is don't wait for the dot to print. Get your attention up there. Here's the price marker here, you see? And they'll actually be colored when you're trading live. Or if I push this to the far right side of the chart, but they're just showing up all gray because we're further out into the chart. This is the price mark. When you see this price marker merge into this one, I'll show you as I forward the price here. Watch. See the 2320? Now watch when it merges into that, the yellow dot comes on. So that'll happen live as well. That's by watching the price marker, you're able to here's where you're going to hit the sell button, and there's the price marker, and you're just waiting for it to come up and merge into that, like right there. It's almost there, and right there, see how it sits right on top, and you just hit your sell button, the yellow dot will come off, and now you're in the trade. So it's going to do that up to 6 candles from the sell channel opening. 1, 2, 3, 4, 5, 6. Notice how it didn't print a yellow dot here. That's because 1, 2, 3, 4, 5, 6. See that? After the 6th candle, it's not going to print on the signal line, even though it's hitting it here, 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 and here. You want to get the first 2 or 3 taps on the signal line to enter the trade. We don't know if it's going to go higher and maybe even stop the trade out, or go a little bit against the trade, or it's going to hit the signal line and drop right down. Nobody knows that for sure. But it's a proven method. Boomerang's a proven method with guaranteed, the only system that's ever existed in the entire trading industry since the 1900s, early 1900s. There's never been a system that guarantees 90% winners. We're the first and the only one out there. I've raised the bar so high. If you're looking at any other system, go ask them, do you guarantee 90% winning trades? They'll go, what are you, crazy? Nobody does that. And you'll know who does. And you'll know that they're clueless, that they don't know that, but they don't want to mention Boomerang because Boomerang's lifted the bar so high that they don't have the guts or the quality of the system to guarantee 90% winning trades like we do. But so that is, again, if you want to add multiples, it's right here. You go short and they push against you. Second level, hit a third contract. Say you're going to do 10. Fourth on the Cobra. Ooh, they're pushing against you. You get a little nervous. They drop down a little, spring back. Fifth, sixth, and now you say, okay, I got 7 on and I'm good. And you let them go. And then as they start coming down here, just start buying them back. You know, boom, boom, boom. That's what I do. You can leave the whole thing on if you got the guts and you want to do that. But what I do is, if I've put like a core position of say 4 on here, and I start adding 3 to 4 up in here, as soon as I get them down here with 1 or 2 points, I start taking a few off to zero out and take some of the risk off. Yet I'm preserving the gain from the trade, because if I got 1 or 2 points on it, I've got a gain built in. And then if they just fall off the cliff, then you're in great shape. So I wanted to make sure you knew that. Another question coming in is, I thought you wanted to wait for all the trend bands match. Mike, there's 3 conditions that you're watching for. Matching trend bands is one of them, but that's in the bunker method. And we'll talk about that next. In fact, I'll go to today's session for that. So that explains the core method of trading with Boomerang, including the brand new trend following method that I just introduced approximately 2 months ago, or less, I think. But what's called the bunker method, which I describe in here, which came during the January period, bunker Boomerang trading, I introduced it on this webinar here in late February because of the madness of January, and I'm sure you must remember that. It wasn't long ago. that kind of stuff can happen. And that was the good old Fed raising the interest rates, thinking they're real clever and they're going to raise interest rates, and they just destroyed the market. The minute everybody came back from the New Year's holiday, those jerks raised the interest rates, and the market just got slaughtered. It was just absolute nightmare. And whatever, those of us who survived, like me, it was tough. I mean, I watched my portfolio and the portfolios we managed were getting decimated because we were heavy in oil and gold, and those were the two things that were just getting beat to hell, and it was really tough. Well, I've since recovered, you know, I would say 90% of that and more, with the gold especially, and the crude oil is a different story, but we got a great recovery on the crude as well. Here's how the bunker method works, and this is what Mike's talking about here. When things get really hairy and the volatility is there, like Brexit. Of course, you don't trade on the Brexit. When that day happened, and they raised the margins, and the market's going to open down 30 handles on the S&P. Take the day off, please. Don't trade that day. However, today was an FOMC day, and it was really volatile. The last 2 days have been very volatile. So I'll go over the last 2 days, and all I'm going to show you is what we call the bunker method. Now, with the bunker method, because one of the methods of trading with Boomerang is, like, here's a classic example, which is real nice. This is about 10 minutes after the market opens. Remember, the conditions are the spread is a point and a half or less on the crossover. They've already crossed over, or, in a big underline, or the dynamic trend bands are matching color. Now, that's sometimes, like in the case here, is going to happen prior to any kind of crossover. When that happens, you get a sell channel. The dynamic trend band number 1 changes to the sell color, the magenta color, and you've already got the dynamic trend band number 2 magenta because of a pre-market sell-off. So here's the marketing open, a sell channel comes in, you've already got dynamic trend band number 2, the magenta color, the reddish color for selling, and a new one up here, you go short right here. And that's a method that is valid all the time, but the bunker Boomerang method is so simple because all we take, and that's when you're hiding in the bunker, those are the safest trades to take. And you can use them every day only if that's what you want. And that is when the dynamic trend bands are matching like this, you short in this case, take your 3 points, and that's it. You wouldn't use any other method with the bunkered method. Now here's another example. Dynamic trend bands cross, but you're not taking any trades until the dynamic trend bands match color. So here's a pullback to the signal line right here, 97.75, and up they go in this very choppy market condition. Let me find another one. Well, here they are matching here, but all of the signal line dots have been used up, so there's no trade there. See what I mean? So you would have had, on this day, you would have had 1 trade, 2 trades, nothing here. Now remember too, there's a rule that I forgot to mention. There are conditions that you don't take a trade, and that's when you have what's called a fat channel. A fat channel, which is shown right here, occurs when you have, like, for example, a bottoming here, and a candle that comes right off this bottom at 85.5. Some spoofer came in there. 85.5 runs to 93, an 8-point candle in one jump. And then a follow-up one here from 93 to 97, a 4.5-point candle. I can practically guarantee if I was live, I'd say this trade isn't going to be a fat channel. Then the market has the gall to come in here and make a little candle and then shoot another one up to the moon here from 96 all the way up to 01, a 5-point candle. So you got anything over a 3-point candle, you got to be on caution alert. What to speak if you get 3 or 4 of those in a row? It's going to form a fat channel, what I call a fat channel, and that's one there. where the new buy channel comes in on that third candle whipping up, then they shoot up higher. It's going to make a wide, fat, what I call a fat channel, and we do not trade the pullback the sig line on the top of a fat channel. Absolutely no way. We got to wait for that to pull back. So that's an important rule. So this is not a boomerang trade here. This is a fat channel, which are easily identified by 3-point or more higher length of candles coming in and forcing the market into a big, you could call it a bubble if you want. If you don't like fat channel, you can call it a bubble channel. Now, so none of this is not a trade, even though the dynamic trend bands match, and even though 98.50 shot up to 150, it actually made a 3-point move. Still, this is not a bunker trade, and it's not a matching dynamic trend band trade. It's a fat channel that you'd avoid. Now, here is a real tricky one here. Here's a new sell channel, and right on this candle, the dynamic trend band number 2 was already bearish, and the number 1 was probably blinking magenta at that time. You might have caught this one and it would have been a bunker trade, but odds are it's probably about 50% you caught it, otherwise you missed it. So no big deal. And this is what a main theme I wanted to talk about today. When you get in markets like these, and this is the last couple days, so I'm going to show you how this method is really effective on these days. Basically, you got to come to work every day. And I have a little trouble with this too after trading for 26 years, because I love to trade. And so many times when the markets are active and flowing my way, I can nail 10, 15 NASDAQ points in the first 2 hours of trading. And you get a little hooked on that, sometimes in the first 45 minutes or an hour. And you can't expect that every day. And I knew the Fed meeting was today, but I just was a little bit rambunctious trading. And I thought, I made a note and reminded myself, I already know this, but you don't be anxious that I put at all underlined. You got to come to work. And then I realized it's really not something to tell yourself while you're trading. It's something to tell yourself before you trade and every day, of course. But don't be anxious at all to trade. You should really be, if you're going to be anxious to be patient. Sounds like a oxymoron there, but be anxious to be patient. Be more committed to being patient than anxious to wait for the exact setup so you don't find yourself accidentally making up a trade that doesn't exist. That's wrong. So again, here's another fat channel where the market's shooting up here, forming a bubble. See that? And you got another one of our rules. There's only 3 of them. Is you don't trade against a flat dynamic trend band, and you don't trade against a steep dynamic trend band. You want a trend band that's opening up like this. It's all just starting to flow to the downside. And in this case, you got all the colors matching, but you don't have a big bubble on top of it like here. It's real simple to learn. Real simple to learn. So here's a classic example of a bunker trade. The market form. The first thing always is you wait for the sell or buy channel to form, the arrow to form, and that candle to lock down, and that tells you that a new channel is formed. Now you can put a tick meter on your chart if you're sitting in this and the arrow's blinking on and off, which it will. You're waiting to see when's that candle going to close, because I see that the dynamic trend bands are matching. I want to sell the next yellow dot. You can get a tick meter it's under Ninja Indicators menu that you have there. Just look for tick meter, I think it's called. You'll see it, and you put that on there. Make sure it's set, so it works live, and it'll automatically tuck it right down here. I think you can't move it, and that tick meter will tick counter. Thank you. Thanks, Maddie. Tick counter, and that'll tell you when the ticks are out. So it's 77 on this one. You see that? it'll jump in chunks sometimes. All of a sudden it goes 2 meters, and now the candle closed. You'll know. And then that next yellow dot comes in, hit it, because that's where the dynamic trend bands are matching, and down you go. Again, here's another fat channel or a bubble. You don't want to trade these. They made a low here. And then this green candle, first one here, comes screaming in at 81.5 to 86, 5 points almost, and then a succession, 1, 2, 3, straight up, straight shot up. You can't miss it. It's a wide, fat channel. You're not going to buy them up here, even though the dynamic trend bands are matching. The candles shooting up here forced the whipsaw, forcing the market up. Even change the color of both dynamic trend bands, but it's a fat channel, and the simple rule is not to trade against them. Over here, again, the whipsaw came back into the downside. Look, it's not Boomerang's fault or my fault or your fault. Whipsaw is occurring in the NASDAQ, and I'm going to show you pretty soon here. I got to kind of hurry because we don't want to go too long on this recorded part of the seminar, but I'll be around as long as you need for question and answers after this. But let me finish up here on these last 2 days sessions, showing you the bunker method and the rest of the method, and then I'll switch over to crude oil because I got some exciting news of how you can use both contracts. When one's driving you nuts with a whipsaw, you'll find crude oil is very, very smooth and rarely whipsaws trades. So here, matching dynamic trend bands right here, market already fell off the wagon. Now, there is the possibility that you got short here thinking it was going to work and you got stopped out because they're matching. They're down here, but what really, there's a lot of whipsaw going on here, and you might have gotten caught up in it. Don't worry, that happens to me sometimes too. You get excited, and you want to trade them. Now, there was a yellow dot up at the sig line here, but they really weren't matching. You're going to see that live. If you got into that, not a problem, because right around the corner is a crystal clear, a new buy channel, crystal clear matching dynamic trend bands, pull back the sig line, and up they go. So you just made that back. And when you saw here, say you did get short here, and all of a sudden you got a green candle spike, you can just get out. You don't have to wait for the 5 points. I mean, the green candle's just kind of throwing everything off. And if you were short here, 82, well, anyway, if that's what happened to you, don't worry. Here's another winning trade right here. And again, that's coming in the later part of the day. So you can see there weren't a lot of trades, but if you were trying to be real extra careful by using the bunker method, I lost count here. What did we have? 1, 2, nothing here, nothing here, possibly here for 3, definitely here for 4 or 3. Nothing here, fat channel. Maybe you caught this one, but probably not. Here, crystal clear. And so you had 4 winning trades. But you waited, and those were the safest trades, and they panned out beautiful. That was yesterday. Now let me go over today. And you notice there weren't really other trade setups. It was like those were the best ones to take and the only ones that set up correctly anyway. And again, it's not anybody's fault. It's not Boomerang's fault. Boomerang, when the market's, quote, normal, whatever the heck that is, and trading in flow, 10 to 15, 10 to 13, 14 trades is not unusual. 6 to 8 is practically a given. But in these whipsaw markets, we just finished the holiday. You got all this terrorism that they pushed all weekend on the news. Makes you wonder who the terrorists are, really. The news media. The rigged news media. Can't even sit home and watch the Zone-a-thon marathon or the Bond-a-thon, or the Chuck Norris-a-thon or whatever guys and gals like to watch. The Friends marathon, family stuff. You got to have all this stupid terrorism shoved down your throat the whole time. It's really a bummer. Anyway, matching dynamic trend bands. This is today. So I'm saying that too is going to shake up the markets. It's going to make people nervous. They're going to trade jittery. They're going to be a little more crazier. You see what I'm saying? That's why we check the news. You can't expect the market to be the same every day. It's not. It's actually different every day. You have to expect that it's different every day. I got this big note on my desk. Must be prepared every day for a surprise. And then I have my other one. Don't be anxious at all, underlined, to trade. Be ready for a surprise. You may not know what it is, but don't go into the market thinking, oh, la di da, I'm going to just trade Boomerang and follow the method and all that. Of course, you're going to follow the method, but watch out because there might be some weirdness coming up here. Today it was the Fed guys trying to rig it up, and that's today's here. I'm going to show you right now. Let me just double check to make sure that's correct. Yeah, here's today. Okay, remember what I said. So here's a choppiness on Globex. Here they are opening up. Little pullback in the morning. I remember this. Matching dynamic trend bands right off the bat here. 72 quarter brings them right down to 67. So there's your first trade right off first 10 minutes. Matching DTBs using the bunker method. Here's the second bunker method trade right here. And here comes the Fed cheerleading squad on an FOMC day. It wasn't the beginning of an FOMC meeting, but they had that report later. They tend to lurk in the markets on the FOMC days, even more than when they have an agenda to rig the markets up for political purposes. They use all kinds of stuff. Anyway, two trades in the first half hour using the bunker method. Here's a crossover, and maybe they weren't exactly matching, but you had the crossover and it was blinking on. So you could have got short here, or because this was the only dot in the signal line, we have a modification. That is, if there are no pullbacks to the signal line and the dynamic trend bands cross over, you can trade the next pullback to the Cobra, which occurred right here. If you didn't get short here, you could have traded the Cobra following that method. It's a slight modification that I tested, and then I introduced it, 6 months ago or so. And it simply means if there's a crossover of the dynamic trend bands, because it's so reliable, you're going to get a move in that direction of the crossover, that if there were no pullbacks to the signal line within the 6 candles after the opening, then you can trade a pullback to Cobra, get on that short side, and down they go. So this was one method you could use here for that. This was today's. And then there was a lot of this today where they're just flying up. See there, the first one was here, and the second level one here, just screaming them higher. No real rhyme or reason. They just were propping up the market. It was a FOMC day, and they just, traders were real conditioned to the market being bullish. And when it got hit, they just didn't appreciate it. So I think it was a combination of buyers and riggers, So here's the second trade here. You don't have a tight spread. You don't have a crossover. You don't have matching dynamic trend bands until you get to this candle, and they just kind of took off. Now again, you can employ the crossover pullback to the Cobra method, but it never hit the Cobra either. They were just straight up. And that's usually one of the signs, by the way, a little hint, that's usually one of the signs of the riggers being present. Who else has that kind of money to just rock the market so hard? It's probably not normal buyers. It's the riggers pushing buttons and buying millions of shares of NASDAQ stocks with their rigger desks around the world. So nothing here and nothing here, and they ran straight up. Even the trend trading method didn't pan out. You get the crossover here, and you're going to buy a pullback to Cobra. Because the market was so rigged, they didn't even get any pullbacks. They didn't allow any pullbacks, went straight up until it got down here, and then just this very minor pullback here. And again, you got to be careful on these. When you get a big move like this and you don't get a real smooth downside reversal response, you got to be a little careful, because usually what happens, if they don't respond on the pullback, just stay ready for a second level trade and these are normally going to be all trend bands matching here. In this case, that's what you got right here. If you didn't catch this one, They just shot off without you, and that I saw that and I went, oh crap, because again, it was more rigging. That's why you don't get these. We rely on small pullbacks to the signal line to get in our trades. And when it's really rigged, they just shoot it straight up and there's no pullbacks or virtually none like you see here. Didn't even get the trend trade move, which are so reliable. These almost always get hit. Now here you can say, okay, well here's the crossover and here's the tight spread, and the price was 16.5 and they came down to 12.25. So there was a 3-point move here in this crossover, and you would have wanted to taken that. There's nothing wrong with it, but when you see them like really struggling to pull back, then they make a quick pullback, then they shoot right up. If you didn't catch it, keep your eyes on the next buy channel here because it's probably going to pan out. But you have to have matching dynamic trend bands, and 95% of the time you're going to get matching dynamic trend bands when this occurs and they shoot back up. They're going to keep working the upside, but because of the rigging, there were no pullbacks to the signal line. Anyway, that's the way the mop flops. But lo and behold, after a whole bunch of whipsaw up here in the highs, which is common, you just wait, and this is the key. You got to just sit there and say, "Oh, look at the market fly around. Big deal. Who cares?" Right? Doesn't matter. You see the crossover. Now, here's a crossover, which if you're trading the regular method, you can go short right here or right here. But if you're following the bunker method today, then all you're waiting for is here. So on this candle, you go short. You got the matching dynamic trend bands, and I think what's that, our fourth winner for the day, following an ultra conservative method of waiting for the dynamic trend bands to match. You see that? Right on this candle, they're matching crystal clear, and there's your 3 points. Whipsaw coming in here, and you don't have to. I get a lot of emails. Oh, all this whipsaw. Yeah, I know, but it doesn't matter because we're not. There's no boomerang method to trade in the whipsaw. In fact, contrary to that, when you have, here's a classic example of boomerang. It's like a boomerang indicator. Green candle spiking up, green candle spiking down, a blue dot, then a magenta or a off color red candle with a yellow dot on it, then a red candle, then red candles shooting up, red dot or yellow dot, blue dot, all next to each other. That's boomerang saying stand aside and wait for all matching dynamic trend bands because that's the way to work your way out of whipsaw. For God's sakes, this is a boomerang indicator to stand aside. Don't try to figure this out or trade it. Don't pretend that that's a boomerang trade there because um, the spread's tight and that's a short because we're under the DTB. Don't make up trades. Don't say, oh, here's a all matching trend bands here. I'm going to go short. Now, theoretically, you could have shorted that, but the thing's whipsawing. You really want to stand aside, although that panned out, but that one didn't. But this is whipsaw, and you have to face that indicator. Then, when they shot up here, now the trend bands are crossing over and matching. There's your pullback signal line, and up they go with matching dynamic trend bands. And then late in the close, of course, you don't want to trade then, but here's a buy channel, matching dynamic trend bands, and up they go for a final hurrah 5 minutes in the close. So that was today's. You had 5 trades or so trading on this simple, most conservative method and very reliable, the bunker trading method. Of course, all the methods are reliable and we guarantee 90% winning trades from the setups. But this is a way to do it if you're really nervous. Just wait for the trend bands to match. And yes, the answer, Mikhail, is when you have all that's on NASDAQ, it's always going to be 3 points and 5 points automatic stop. You got to give that thing wiggle room. Sometimes you can front run the stop, but don't do it on a 2 point move against you. I mean, the point of the 5 point stop is it's 90% of the time it's not going to get hit. You didn't see we didn't have one single trade get stopped out today on today's demonstration. And I could have gone through all 14 of these sessions here, and I can practically guarantee you that at most we might have had one get stopped out. So don't be so anxious to try to tighten the stop or anything. That's not the boomerang method. The boomerang method is uh, following the exact system and leaving that 5 point stop in. It's really what I call an airbag. It's a good way to look at it. It's like an airbag in a car. It just prevents you from going through the window. Now, when that airbag hits you, uh, you may have to go to the chiropractor or something, because there's been many cases where they really can mosh you up a little on those airbags. But the idea is it prevents you from having your head go through the window. And if that happens or gets smashed into the steering wheel of the dashboard, you might die. So it's better to just have to go to the chiropractor for a couple visits, right? Oh my God. So that's what I call a 5 point stops and airbag, but normally that's not going to get hit. If it does, it's like, all right, well, at least, it stopped me out of the trade on some heavy whipsaw. And that's the way it goes. So, with that in mind, I did want to spend some time, and we've already run an hour, but I did want to spend some time and go over crude oil, which I'm going to do real quickly right now. Now, some questions are coming in here, and there's no trailing of the stop or anything like that. That's one question coming. We don't do any of that. We don't trail the stop. It's a one shot in and 3 points or a 5 point stop. 90% winning trade, so you don't need to use old conventional methods for trailing the market. You don't need to do that. The method for Boomerang is on NASDAQ is in and out. Now I'm going to go over crude oil, which is really nice because, and Stuart, I will get back to your question when I'm done. Let me finish up because I want to get this recording done and not have this go too long, if you know what I mean. So I appreciate it, but we will have a whole Q&A period that will last a long time, as long as you need. All right, now here's what I got here. This is a crude oil chart, and the crude oil method's a lot simpler and crude oil trades a lot smoother. Now, one thing you can do, by the way, and I'll just do this so I can make it easy, you can run the two charts simultaneously next to each other, NASDAQ and crude oil, on your screen this way, or obviously have one on one screen, one on the other, but it's a lot easier this way. And you go, wow, NASDAQ's, just say this was at the same time frame, which it's not by any stretch, but say it was, and you go, oh, look at this crazy NASDAQ flipping out here. And you look over at crude oil and you go, oh, there's a crude trade right there. I'm in. So you reach up here and you click on, I'm going to buy crude. And NAS is flipping out. I mean, this is one answer to whipsaw. Bring up the crude oil charts, because I've already done 2 webinars in this. Crude oil is smooth as silk, and it's a different animal, but it's beautiful. And if you favor NASDAQ and you're watching the stock market, but it starts flipping out or doing too much whipsaw, just keep an eye on the crude oil chart. Switch over there, because money is money, right? A tick is a tick. Now, crude oil trades in each tick is worth $10. So it's it's a rich contract like the ES. But if you just say you're just trading one and you follow our method, what we do, and there, again, there's a special video on here about that. Should I might even make a note to put that. I got to get that in the resource section. Let me find that real quick here. Ultra Brute. Here it is. Successful crude oil trading with Boomerang, 97% winning trades. I did an audit over I'll show you what it says here. You can watch this if you want to get more facts on this after I'm done today. I did an audit from 516 to 526. And this is where I went into detail on 3 sessions. Now, I've gone over 50 sessions, and it's almost the same. It's unbelievably great. But the way for crude oil is we use an 8 to 10 tick gain and a tight 12 tick stop. That's it. 8 to 10, I say that because sometimes it'll go right up and jump into the 8 area. It'll hit 9. I would say about 70 to 80% of them will hit 10 ticks, and I'll show you that in a second here. But I say 8 to 10 because sometimes you just want to go in there and grab the 8 ticks if it's easier, or you perceive that it's struggling or whatever it is. 8 to 10 ticks. And the method is exactly the same, except the only difference is you're waiting for matching dynamic trend bands. Obviously, a buy channel, matching dynamic trend bands. There's no spread on the crossover or any of that. That's for NASDAQ. But let me show you today's crude oil, and you've already seen what we did on the NAS here. Now, crude oil starts getting really active around 5 my time, which is 8 New York time. You can trade it during the regular, after 9 o'clock or so. There's a lot of activity. You don't have to get up that early. For me, that's 5 o'clock, as you can see, and I can't just wake up at 5 and go to the trade desk, start putting on trades. You got to get up at 4:30, kind of brush it off, do a little exercise, stretch it out, wake it up, get some morning water and tea and all that stuff, coffee, but not too much coffee, by the way. Don't hype yourself out. The markets will do that, and markets will do that for you. But you can start, just half an hour before the Dow opens up. But let me show you how this works. I'll do one session, and then I'll refer you, if you haven't seen this before, I'll refer you to this post on the blog. And I'm going to make a note right here. Move crude oil post to our resource section. I'll move that over there, and that way it's for easy reference. Okay, so I'm going to refer you to this after I go over this, just today's session. Look at crude oil. Okay, so let's say we start at 9 o'clock every day. Forget the coming in earlier. Let's say we start at 9 o'clock. Buy channel, matching dynamic trend bands, a pullback signal line. Crude oil's at 46.14. We're looking for 10 ticks, right? 8 to 10, but generally 10. 46.14 jumps right up to 46.26. You're out. 10 ticks, $100 per contract. One tick is $10. And Mike, I just mentioned that crude oil is a straight deal. Matching dynamic trend bands, buy channel, first pull back the signal line, 10 ticks. That's it. Now you're waiting. No matching DTBs here. Second level trades, not really recommended. They may pan out, they may not. Let's see what this one did here. 48 dropped down to 35. Got stopped out. Well, 12 ticks. What is that? 48. Yeah, this would have got stopped out. But you're not really trade. There's going to be some whipsaw, but you're really just waiting for a new buy channel. And right when the buy channel opens, the early session, this is all a little bit pre-market, say after 10 to 6 or whatever, or 10 to 9, whatever. Same thing, avoid the whipsaw. But look at this, new sell channel, crossover, matching colors, short at 46.60. They dive 20 ticks just like that. You wait, you wait, you wait. They cross, they match. 21 jumps right up to 36 for 10 ticks. See what I mean? It's pretty smooth. Real smooth. No big flip outs. Although they can do this. But when you get in that trade, there's something about crude. It's beautiful. I mean, there's just less of these spoofers and riggers like the Fed and all that in the crude oil market. It's just more of its own market, its own world. It's a commodity. It's a different thing, Here's a new buy channel, matching dynamic trend bands. Pull back the signal line here at 64, and they jump up to 80. So you definitely had 10 ticks in there. 64 pulled back to 62, and up they go. 2 ticks against you. Waiting for the next trade. This is like a second level deal, which is fine. New buy channel. Matching dynamic trend bands here at 11, and 11 jumps up to 23. There's your 10 ticks right in there. Happens real quick most of the time, and you can watch it as a second chart and just stay ready. Crossover, matching dynamic. This one, this actually missed. Now, if someone's experienced trading with Boomerang and crude oil, you might have seen this crossover and said, I'm going to nail this trade here, and it worked out for 10 ticks. But the general rule is you're just waiting for the crossover and the matching dynamic trend bands. You could have traded this one, but just get in the market, get used to trading with crude, and you'll find it's quite pleasant. Now here, clearly it's getting a little bit whipsaw here, a little bit crazy. That's all right, no big deal. Gets a little bit crazy, but then you just wait. New sell channel, pull back the signal line. It's 450 ticks, standard 450 ticks, nothing different. Pull back signal line, 10 ticks. And then coming into the close, it closes all the way into past the U.S. market. It is still active. Matching DTBs, pullback signal line, 10 ticks. So there was like, I forget, what was it, like 5 or 6 trades, $500-600 minus commish, and that was pretty nice, huh? It's pretty easy to do. So again, one consideration, because I get these emails about, oh, there's so much whipsaw and all this stuff, and I know that. I'm with you all the way. Run Boomerang like this on one screen. I mean, you'd want to, like, I have a wide screen. I just don't want to get my GoToWebinar too spaced out on your screen. So, but I'm saying you got a wide screen. I still got 2 inches on either side to open it up. But the point is that while you're trading, and you can link the charts and everything time-wise, but I'm saying if Boomerang is over here and it's looking like this, right? Like here's 10:02, and you're over here, and here's crude oil coming in here, and you just had a winning trade here, and you're watching crude oil, and this is happening here on NAS, and crude's just flowing to the upside, and all of a sudden it's crossing over here at 10:26, and here's the market going nuts in here, and you go, wow, you get short crude oil, hands you 10 ticks really quick. You look over here and you go, oh, matching dynamic trend bands, and you go short here. Now, I'm not encouraging you to overtrade, or don't, you might even have 2 contracts on at one point, which is certainly very thrilling. I've done that and watching them both pan out. But if they start going against you, it gets a little crazy. But still, you got your method, you got your stops, you got your rules. But this is what I'm presenting as an alternative to whipsaw and an alternative to add to your business. Both proven. I recommend them. They're both proven. So you can go in and work them side by side or work them one by the other. If you're across the pond, the crude oil's opening around 8 o'clock New York time, so you got a little extra time there. But please go ahead and watch this video for a more comprehensive thing. But it's pretty simple, really. It's just 12 tick stop, 3 points, or 10 ticks, 12 tick stop. That's it. And you can preset that on your platform here. Create a little library. What would that be? 10 tick gain, 12 point stop. I don't have that in here, but it's real easy to make, and then you just load that, and when you hit buy on the crude or sell, it'll put your parameter in there. It's almost like a close thing to automated trading. You put it in there. Same thing, 90% winning trades or better, 97% on this one 3-day period, and I've done 20-day periods. Before I started offering the crude oil and mentioning this as an alternative or an additional contract, I mean, you can trade Boomerang on any stock, ETF, or any contract, but I'm just saying this is really solid, smooth trading. So I tested hundreds of sessions before I put that out. So watch that webinar and this one today. And that'll conclude today's webinar, and we'll go into your question and answers now. Give me a quick second while I set up the video here.